Private capital moves like a tidal wave. Crowdfunding moves like a spark. Both can launch companies, but only one builds empires at scale. Today, it's private funding versus crowdfunding, and once you see the numbers, the power gap becomes impossible to ignore. Private funding, venture capital and angel investment roars to $400 billion globally, swallowing 95% of the $420 billion startup funding landscape. Elite networks on AngelList and PitchBook fuel this dominance, where 60% of deals exceed $10 million through curated investor access. Crowdfunding, by contrast, holds just 5%, totaling $20.34 billion, spread across 1 million-plus campaigns on platforms like Kickstarter and GoFundMe, serving 70% of indie creators. The return difference is staggering. Private-backed founders raise $20 million on average for 25% equity, often exiting at 10 times returns, while crowdfunding campaigns average $25,000, minus 5% platform fees, mainly for validation rather than scale. Growth adds another layer of tension. Private funding expands at a 12% CAGR, climbing toward $450 billion by 2030, anchored by VC syndicates on Carta and NVCA, generating 25,000 deals with 50% of capital flowing into AI. Crowdfunding grows faster at 14.8%, reaching $38 billion, powered by global platforms like Indiegogo, adding 500,000 campaigns annually through reward and debt hybrids. But scale still favors private capital. Accelerators like Combinator unlock $100 million plus raises, rising 30% year over year, while crowdfunding medians sit near $8,000. Private-backed startups reach unicorn status 40% faster. Deal flow shows the real divide. Private funding controls 90% of high-stakes deals, totaling 25,000 global transactions, unlocking $300 billion through syndicates and elite VC pipelines, with 120 applications per VC slot. Crowdfunding's 10% share fuels 1 million campaigns, yet only 23% succeed, producing about 230,000 wins. Angel-backed exits regularly pay founders $50 million plus, while successful crowdfunding campaigns average $28,000. Private deals also run 80% remote, opening elite access worldwide. Capital size seals the advantage. Private funding dominates 92% of mega rounds, with $20 million median raises, climbing to $100 million for AI leaders, across 15,000 US rounds. Crowdfunding averages $25,000, peaking near $100,000 for rare equity campaigns, while competing across 200,000 platforms. Angels even monetize expertise, earning $50 per hour for advisory work, compared to crowdfunding's $5,000 flat fees. Hybrid strategies can still unlock 30 million plus raises. Independence favors private capital. It captures 85% of the $350 billion freelance and seed ecosystem, about $297.5 billion, with angels averaging $50 million annually through 40% repeat syndicates. Crowdfunding holds 15%, averaging $10,000 per campaign, where 77% fail, compared to private funding's 70% close rate. Private investors scale further through LP shares, generating $10 million per month, while crowdfunding perks average $2,000, with syndicates delivering 50% higher multiples. Platforms define power. Private funding's 95% stronghold, worth $380 billion, runs through AngelList and PitchBook, driving 85% of VC flows and supporting 20,000 syndicates. Crowdfunding's 5%, about $1 billion, thrives on Kickstarter with 41% success rates, generating $8.6 billion in pledges. While crowds offer faster entry, private networks reward precision. Education alone boosts private deal success 25%. Networks multiply outcomes. Private funding's 95% dominance accelerates through Gust and Carta, enabling 15,000 daily investor introductions. Syndicates earn $20 million medians, while mentors charge $100 per hour. SPV flips generate $15,000 monthly, far surpassing crowdfunding's $25,000 one-off returns. Entry barriers split sharply. Crowdfunding captures 70% of beginner raises, supporting 700,000 campaigns with $10,000 entry points and 90% remote access. Private funding holds 30%, but starts near $5 million, scaling 12% faster with $15 million premiums. Crowdfunding creators earn $5,000 monthly, while accelerator-backed founders climb toward $50 million, blending into $25 million hybrid strategies. AI redraws the battlefield. Private funding shows 80% resilience, worth $320 billion, using AI tools that cut diligence 50% and boost outcomes 12%. Crowdfunding holds 20%, facing 30% automation, yet community-driven campaigns still grow 25%. Private investors now license AI scouting tools for $12,000 monthly, while crowdfunding campaigns use AI video tools to raise goals 30%. At the summit, the gap is absolute. Private funding controls 95% of elite raises, around $380 billion, combining $20 million rounds and $50 million syndicates into $100 million raises. Crowdfunding's 5% peaks near $100,000, with limited scale. The most powerful founders blend both, unlocking $150 million hybrid raises, with 65% tripling their growth trajectory. Crowdfunding tests ideas. Private funding builds dynasties, and dynasties are forged with scale.